Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's CattleFax Closing Bell is sponsored by Zoetis. Implant with 200-day Synovex 1 feedlot to increase gain efficiency, spend less on labor, and see more green on payday. Visit nostresssynovex.com. On August 2nd, the USDA released their 2018 Land Values Summary. United States farm real estate values, cropland values, and pasture land values all increased on average between $40 and $60 an acre versus a year ago. Farm real estate, which is a measurement of the value of all land and buildings on farms, averaged $3,140 an acre, with Corn Belt real estate selling at an average of $6,340 an acre. Cropland values averaged $4,130 per acre, which is equal to the 2015 annual average, the previous highest on record. Pasture values set a new record average price at $1,390 per acre, which was a 3% increase over last year. Regionally, the weakest growth took place in the Great Lakes and Pacific Northwest, where pasture values were unchanged on average. The states lining the Central Plains highlighted the most growth, north and south. In the Southern Plains, pasture values from Oklahoma and Texas were on average 4.1% and 6.1% higher, respectively. Kansas pasture values were unchanged versus 2017, but surrounding Missouri and Nebraska showed annual percent growth of 6.6% and 8.6%. Nebraska pasture values were priced over $1,000 for the first time on record, at $1,010 per acre, an $80 change over a year ago. Land values not only determined by the productive value of the land, but also by the long-term value of a finite resource with increasing demand. The cow-calf segment of our industry has been, on average, profitable every year since the beef demand lows in 1998. In order to grow in the cow-calf segment, producers need to invest in cows and land to expand their herd size. This requires profit to reinvest or borrowing on credit. Based on estimates from the CattleFax cow-calf survey, it took roughly 50% more capital to operate in 2017 than it would have just 10 years ago. Interest rates have been historically low and little changed following the recession in 2006, but are now expected to increase incrementally through the end of 2019. Low interest rates meant producers could restructure and service debt with little change to the loan interest rate. Going forward, rising interest costs will present a challenge to agriculture and could affect the level of demand for investments in the near term. Thanks for watching. Remember to visit CattleFax.com to become a member and see the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the volatility is extreme, the risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.